at the Brookings Institute and also a former Deputy Assistant Secretary for Economic Policy at the Treasury Department. He joins me now from Washington. As we're getting more information, speaking to people that have been affected, it is really mind-boggling to see how this is playing out. Are you part of the group that feel the Fed needs to stop hiking rates?
So look, the consequence of monetary policy of the Fed's failure to supervise and properly regulate Silicon Valley Bank is really stunning. You know, last week, Fed Chairman Jay Powell was going across Congress testifying, preparing the markets for a larger interest rate hike of about 50 basis points. And now he's got a full-on, the start of a possible bank panic or contagion on his hands. And he's worried about the consequences of that. And the Fed's now, monetary policy has been too much of the focus of the Fed. I wish they'd been focused more on regulating what was going on Silicon Valley Bank. I've long questioned whether the Fed's interest rate hikes are really what's necessary to tackle the inflation issues in America. And so the Fed is caught in a tough situation, because if they pause their interest rate hikes, are they going to be perceived as being soft on inflation, given their messaging?
Surely there must have been some kind of scenario planning to see what this was going to do to banks that had exposure like this. That's the first thing. The second thing, we've learned our lessons. We saw what happened during the 2008 financial crisis. The Dodd-Frank bill came into effect. That was watered down slightly because of quite a bit of lobbying in 2018. It's a confluence of issues that are now coming to bite us.
Well, no. A couple things, right? One is, I wouldn't assume there was planning on this. I don't know why you would. The regulators were looking at the stock price and other indicators. The stock price was $200 a share, $275 a week ago. It was a highly rated institution, I think, through Wednesday. Surely, if the Federal Reserve would have noticed this entity that it regulated quadrupling in assets over 4 years with huge exposure in unhedged interest rate situations in treasuries and mortgage-backed securities. So on the one hand, you have the Fed not supervising this entity, which was raising red flags all over the place, and then seeing the dominoes and contagions that go on. So look, a lot of Dodd-Frank assumed folks on top of things. You can't regulate people doing their job. And clearly there was a stunning failure here to supervise this entity by the Federal Reserve, who regulated Silicon Valley Bank head to toe.
Yeah. And even Richard Quest earlier said, delineating between what this means for the banking sector, what this means for startups. So let's talk about the two different scenarios that are playing out. Do you believe that there is contagion and systemic issues that still need to be worked through the system? And what would that look like?
Yeah, so look, they're clear. Silicon Valley Bank was a super outlier. 97% of its business was uninsured deposits. Banks of its size usually have 1,000 branches. It had 16. So this thing was a total outlier. Now, are there other banks that have similar models that rely heavily on hot money? Yes. So it wasn't alone. It wasn't the only one with exposure to crypto and Silicon Valley startups, et cetera. But there aren't as many other banks like that. This doesn't really pretend on Main Street banks, who by and large are far more safe, far more sound. So in that way, I don't think so. There isn't. But, contagions are tricky things. Panics are tricky things. They don't behave rationally. So I can explain to you that one set of banks over here were outliers and almost all the rest were really in much better shape. But you have to trust that. And it's hard to have trust when the Federal Reserve was regulating a bank right under its nose that just imploded like this.
Such a good point. It is about trust. It is about sentiment. And, that still is a big part of the calculus here. Klein, thank you very much. Great to see you. I appreciate your insights.